On one of the accounts I set a TP, the other one I didn't. So let's see what happens when I press play. What's happening, family? It's your boy Roms, and today I've got a video of a trade breakdown on GBP USD. But the main thing I want to cover is the power of having a take profit limit set, right? So there are some traders that don't set take profits, and what they do is they take partials along the way to try and have their, leaving their runners to run. And I understand it. I get the logic behind it. However, through my journaling and through my, my experience, I found that with the way that I trade, I think it's better off that I have a take profit set. And in this trade, I was thankful that I did, and I'm going to show you why in just a second, all right? But what we've got here, we're going to break it down from the top down first of all. We're going to start with a 4 hour here. So the trade happened around this zone here, right? But let's look at what's going on here. So we've got the 4 hour time frame. You can see that we are technically in a bullish trend. Where price has expanded and then it's retraced and it's expanded again, and then throughout here you can see that we're still within this range. Let's say here to here, right? So you say this is the low of the range, this is the high of the range, and you've got all this liquidity down here. So if we look at it for what it is, the way I see this, we're using my trader model and the way that I trade, I'll look at this as, so we've got trendline liquidity here that was swept or induced, and then we also had these a million bottoms that have been taken out here at the bottom, induced to the low, and then price then reversed, and now we're looking a bit more bullish. And you can see this massive fair value gap or imbalance zone where price tapped into, mitigated some of it, and then it went, right? But if we're now looking into this zone here, we can see here that we can't be looking at this and thinking, that price is going to be bearish based on the 4 hour time frame. At this point, from the 4 hour, we are bullish. However, with the way that I trade, I typically, I'm a day trader, so I will take a trade on the day and I will close the trade on the same day. If I do have the trade left overnight, it will be very small volume. I just find that if a trade hasn't hit a certain level, the level that I'm going for within the same day, there's chances are that it's not going to hit that level, or I don't want to give back too many of my profits. I'd rather close out most of my position and then go for another trade. So if we go now look at this price action around here, we've had the inducement to the low, so now we're looking for price to take liquidity on the other side, right? So we've got this fair value gap up here. Price has tapped into it slightly, but there is more to be filled. And if we go down to the on the 4 hour, we can see here this aggressive move down, and then again price expanded higher. If we look at this as a low that has been induced on the 4 hour, and then price went and created a new high here. So with the way that I look at this, I'm not expecting this low to be taken just yet. I'm expecting at least this high to be taken first, if not that high potentially, but that didn't even matter in the end anyway. Down to the 1 hour. So on the 1 hour, again, this is what we're playing with. We're playing with the fact that price has come down, taking out this trendline liquidity internally, and also taking out this low here. And we had this price action in here, and I was now expecting, because price induced to the low and then created a new high, I was expecting price to move back into the discount area. My actual target, long time, I'm looking, if I wanted to take a buy, I would be looking at this low to be taken or induced, and then price to respect this low and then go higher, right? That's how I would look at it. But when it comes to the actual trade that I was looking at, we had price create the high, okay, and then the high internally got ran again, okay, and then took out this low. So at that point for me, it kind of shows the bearish intention. And then we had this on the 1 hour, we had this imbalance fill here as well. So, wrong button. So we had this imbalance fill here where this wick taps into the fair value gap or the imbalance and fills it, okay? And then let's go down to the 15 minute. So because of the price action on the 1 hour, so on the 15 minute, this still does have space on the fair value gap, right? But the 1 hour showed me that the fair value gap was filled, and then I had on the 15 minute the structure levels to show that, you know, price could potentially be showing that it wanted to go bearish. So what we did have is on the 15 minute, we can see here, we clear on the 5, we see this high that had been induced, and the high was induced while price moved into the fair value gap. And then straight away you see the change in state of delivery with this high or this candle here being engulfed by this bearish candle, and then price seeming like it's going to move lower in the because this low here was then taken out, right? So go down to the 5 minute. A bit more clarity now on the 5 minute. Okay, so this is where it gets a bit more interesting with the detail that I look into. So I'm now expecting this high to hold, because this high is the high that filled the 1 hour imbalance over here, this gray box. Yes, on the lower time frames, there's 5 minute imbalance here and it needs to be filled. There's 5 minute imbalance up there that needs to be filled. However, the high time frame is king. So when you understand what's going on the high time frame, you realize that price doesn't have to go to the lower time frame liquidity or the lower time frame imbalance zone. For example, to these kind of liquidity pools, that doesn't have to get taken now, because you understand what's going on the high time frame. So at that point, I knew, don't get it twisted. There's a chance that price could just violate this high, take out these this liquidity pool, move into this imbalance zone, and then move lower, or even just keep going higher, right? But trading is an uncertain game. You never know for sure what's going to happen, right? You work on the balance of probabilities, you work on your edge, you work on the fact that you've backtested your model and your edge, and you have enough data to show that if you take enough trades using that model and using the edge, you're going to come out on top in regard to profits. And that's how we have to take our trades, okay? So we had a price here, and price had, like I said, induced the high. And then after inducing this high again, price induced an internal high and then moved lower, took out this low. And for me, this is the key low that I would like to see taken before I then enter a trade. So for me now, I saw this and I said, okay, I want this high to be taken as well as this high here. And I would set my limit here as long as I'm in the right trading, trading hours and timing fit. And then I would put my stop loss above that high. But the question would then be, where would the target be? And why would the target be where it is? Okay, so let's look at what makes sense. And first things first, that you've got the Asia low here. So this pink box or purple box is the Asian range. So you had Asia low here. So has to be my first target, first things first, right? So if I look at that and I go, easy, 5R. So for me, that's perfect. 5R trade, that's solid. If you have a 50% win rate, okay, and you take 5R trades, you can make real bank. You can make real profits, okay? So 5R is a great risk to reward. Of course, you can get more than that. I know people that are making crazy money with 2R risk to reward, right? It depends on your trading style. It depends on what you're comfortable with and your edge and your model. But there's no one size fits all with what's best for you. So I see that as my first target. But also, what did I also mention? I also mentioned here that I would want this low to be taken as well, ideally for a 10R, right? Before price would then reverse, respect this low, and then go higher. That's what I was looking at. Again, I could be wrong, but that's what I was looking at. However, there was a news release coming, and I actually had two accounts that I set the limit on for this trade. I had two accounts, and one of the accounts I set a take profit, and the other account I didn't. Okay, so you got the liquidity levels here. So you got almost this trend line type liquidity here as well as a target to take. You have this internal high here to be taken. Mark this up here. You got this high here, which is a high on the smaller time frame. This little bullish candle here, and then you would think that price would move into this fair value gap, mitigate some of it, if not all of it, maybe even, and then reverse to come down and hit my target. So on one of the accounts, I put a set of TP. On the other, I didn't, because I actually believed that price could come down here, and then that's when I would. It depends on how price would move. Because sometimes you'd set a take profit at this low, for example, and then but price would be booming down, and you get no no resistance, and price will just move into the 10R target, and you're like, why would I set a TP at 5R? I could have doubled my profits. However, on one of the accounts I set a TP, and the other one I didn't. So let's see what happens when I press play. See, okay, this is where it gets really interesting. Really interesting. Remember what I said? On one account, I set a take profit at this low. So on that account, boom, price smashed through the target and took me out 5R, profits taken, boom, happy, right? The other account, however, it's going to the M1. I got the alert when price moved down to my target down here, okay, which was the Asia low, my first target. And then I was just seeing my profits go from 5R back to pretty much nothing on my account, okay? And that was really interesting. So when I saw that, the response, I was thinking, okay, we're going to go bullish now. We're going to just fly higher. And what I actually did, and this is where I'm human, and this is where I still have to develop my psychology, is that when price went back up and it got to 1R, I closed the trade on that account. So I was like, there's no way a trade can go to 5R and then me not take any kind of profit off the table. It would make me feel sick. Okay, so I actually closed the trade at 1R, but price did come back to break even. I wasn't actually break even set on breaking on any of the accounts, but I came back to break even. But then look what price actually did. Price then eventually started to moving towards. Let's go back on the 5-minute just to speed things up a bit. Towards my target, and then eventually I'm gonna go 15-minute. Went for the following day. And you can see here, price eventually went down lower, and it actually missed my actual target. See, the thing is, with the way that I trade, I would not, even if I was down, say down here, and say I was in 6R profit, with this kind of price action here, I would have more than likely taken the whole position off anyway. But because price eventually also didn't hit my target here for 10R. It reversed and then went on the following morning during London, right? But this is when I say the power of take profits. If we're in trading, if we are traders for the sake of freedom. I was at work, so I couldn't manage this trade properly. I was kind of panicking when I saw the profits dwindling, right? We're human. My psychology isn't A1 yet. I'm developing that. But on one of the accounts, take profit was hit. I had my 5R locked in, and then I was happy. And then the other account, I'm panicking, and I end up only securing 1R. And this is also where, excuse me, this is also where greed can come in. Because yes, price could have hit my target here. But if I'm going to make consistent profits, doesn't it make sense to go for the low hanging fruit? Doesn't it make sense to go for the targets that I know should be hit as long as as long as the trade is correct, I know it should be hit, and secure the consistent wins, and I can build my fortunes that way rather than always going for the home runs and expecting the big targets to be hit, because they're not always going to be hit. Imagine if I didn't take any partials and then I was waiting for this 10R to be hit, and then I just lost out on the whole trade because I didn't even take any partials, and then that would have made me even more sick, right? But it was interesting because I had the two accounts, because I had one account that hit take profit and I had the other account that only secured 1R on. I looked at it and I was like, you know what? I'm so glad that I've done that, because now I've got to experience the same trade, and the fact that the news release made price move into my take profit area, and then reverse, it showed me, it revealed first of all, my psychology flaws, but it also revealed what I prefer in regards to the way that I want to trade. And I want to trade for freedom. I want to be out and about. If I've set a limit, I know price can mitigate the limit. I know price can tap into the limit. I can get filled. Price can reverse, hit my target, and I don't even have to manage the trade. Ideally, that's the kind of trading that I want to do. So I trust that you guys can learn from my mistakes and you won't have to go through the psychological turmoil that I went through when I was managing this trade. So use my experience so you don't have to go through the same thing, and you can improve your trading psychology and your trading edge and managing your trade. Don't forget to hit like and subscribe. And if you want to watch more content from me, hit that video in the corner because I'm sure you'll enjoy it. God bless, take care, and I'll speak to you soon.